So for markets, what does a Modi-led coalition government look like versus a ruling party-led government?
Well, a coalition government is always complicated, but I think the most important thing is that BJP has to reflect now on what led to the losses in the elections. And that is likely to lead to some shift in policy. What they've been doing so far was quite market-friendly, but apparently it was not well received by the electorate. So what our concerns are is that if that shift in policy leads to fiscal loosening, that's not a positive for the bonds of the country.
And what about for the currency of the country?
It's a net negative for all Indian assets. What we are really hoping to see is that the coalition maintains policies that are market friendly, but reality is in order to gain popularity in general, you have to spend more money.
It was kind of interesting that this election came at the same time as two other relatively critical elections. So I don't think everyone thought they were going to be as critical as they turned out to be. That includes the results in South Africa, but also Mexico. We saw a pretty severe market reaction, particularly in the pesos. I know it's rebounded a little bit today here. But even though the final outcome, meaning Sheinbaum elected, everyone knew that was going to happen. Similar to Modi, the question now is, what's the complexion of that government and what does it mean for the market?
Yeah, we thought the market was being overly complacent about these elections. The reality is, and I'm not sure what it takes for investors to realize this, polls are not predictive. And you really can't follow them. So there were tail risks in all of these elections, and they actually materialized. And what that means is that the risk premium for these countries should be higher going forward. In the case of Mexico, what the government does with a supermajority is going to be key. If they try to pass legislation that is going to be either relating to fiscal loosening or compromising the institutions of the country, that's going to be a negative for Mexican assets.
Do you see right now, based on what we know, an investment opportunity there? And I'm talking like new positions, not people who are already
I think
invested.
you should be cautious.
Yeah.
I think you should be cautious until you understand what the policy mix is going to be going forward.
When you say the risk premium should be higher, how will we know when we've reached a point where it's about right?
Well, that's something we analyze every single day, and that's why you need active management in these countries. These have been consensus bets. Everybody has loved Mexico and India. The reality is we have found value in countries that are much less loved, the distressed countries in emerging market, sovereign dollar-denominated debt, countries like Argentina, Egypt, Angola, and even some countries that are going to emerge out of default this year, like Ghana and Sri Lanka. We prefer to avoid these consensus bets, and especially with some of these tail risks materializing, we think that you have to be cautious going forward and continuously assess them to see what policy mix is emerging and how much risk premium is warranted.
What about folks who don't need to be in emerging markets at all? I mean, we talk about the risk premia, how they should be higher, and you're talking about looking at markets that people don't love right now. It's a high bar for people to get to if it's easy for them to make 5%, 6% somewhere else at a risk-free rate.
It's an excellent question. The reality is the countries that we've liked have been up as much as 30 to 50% in the last 1 year. So I don't think this is an opportunity that investors should mix. The only difference is you have to really do your homework and choose the right countries.
Is the rate story, though, going to start to work in their favor? I mean, we've talked a lot about central banks starting to lower rates. We saw that from Bank of Canada. The expectation is ECB tomorrow, and it might be a while before the Fed gets there. But we're starting to see the direction that monetary policymakers are looking, and at least for right now, they're looking down.
Absolutely, and that is going to be another tailwind for emerging market fixed income assets. So we don't think this is an area you should absolutely ignore. There are going to be countries that perform better versus the other ones, and that's our job to basically create alpha for our investors.
We can't talk about EM without talking about, I guess, the biggest EM country out there, which is still China. We don't talk about China anymore. I feel like it's like, the uncle that we keep in the attic that nobody wants to talk about. Are we going to see a rebound there anytime soon? Do you anticipate one?
We are constructive on China fixed income assets. The reason being is because so much negativity was already priced in. And we believe the government is serious about addressing some of the structural and liquidity issues in the housing sector, which is key to maintain the growth levels that you are mentioning. So that, to us, is still a very attractive opportunity. And again, much less loved by the market, as you mentioned.
Because there's almost no like uncertainty there. I mean, I know people are like, oh, okay, when's the growth come back? But I mean, nobody's questioning what Xi Jinping's policies are going to be over the next couple of years. I mean,
absolutely.
He's telegraphed that.
And look, the China high yield assets have performed extremely well. I mean, they're close to U.S. equity markets, which is a difficult feat to accomplish.
Yeah.
So bottom line, Shamaila, what should the leaders of these countries, Mexico, India, South Africa, what should be their takeaway from investors and from their own electorate?
So there's a different takeaway from investors versus the electorates. The investors want policy continuity. Policy continuity has unfortunately not worked for India and South Africa. So they will basically be looking to see what they can do differently without impacting the markets. In the case of Mexico, it has clearly worked. So if they continue doing what they were doing, that would actually be a positive. But, having the supermajority can be a temptation.